Is gold ready to come out of its consolidation range and pick back up the major uptrend that it had started in 2019 and 2020? If gold breaks out, we could potentially be heading for another 20-30% gain in this asset class. We're going to be going back to the charts of 2008 to see how gold behaves during a deflation and whether that's something we should be worried about right now. Because if we go on the daily chart of gold, you'll see gold has been respecting this uptrend line since the March low from the health crisis crash. Now we're currently hugging this trend line very closely, and if we get a major break of this trend line, that could be very bad news, an early warning sign of deflation in the economy, not only for gold, but for every asset class out there, including the stock market. So for now, what's the technical picture on gold? We have a triangle pattern right here. We don't have a solid trend line, but we do have a set of lower highs and a set of higher lows right here. This is a perfect triangle pattern coming right after a blow off top on gold. These were massive gains for gold. So getting a consolidation like this after a massive run up on gold like this is actually very bullish. This is very healthy. And if we start breaking back out, it seems like we're starting to break out today, but it's still too early to tell. But if it does break out, this could be a major coiling pattern, coiling the energy for another big move up to targets much higher that we're going to discuss a little bit later in this video. So let's clean this chart up a little bit. And right now, from a pure technical standpoint, we have a trend line. We are testing the trend line. This is an objective moment to buy. Just like this is a good moment for you to click the like button on this video. It really helps the channel out massively. So thank you for doing that. We're currently buying gold. We have a stop loss right here. This is a major level to watch. This 1920 level, if we break that, that could be a very bad sign for gold. But currently we are above it. We're back above the trend line and it seems to be doing fairly well. But in order to really understand what's going on right here, we need to be looking at the US dollar. So this is DXY, the US dollar currency index. The only real way to analyze gold is through analyzing this chart right here. You can see the top. This corresponds to the bottom of the stock market crash of the health crisis. And this just shows you how the dollar behaves when other asset classes go down. Everyone sells their stocks, everyone sells their gold, and the dollar goes up. And what happened right here? We had a stimulus package. Lots of dollars being injected into the economy. So there's a lot more sellers of the dollars, a lot more people buying stocks, buying gold, and selling their dollars. This has put tremendous down pressure on the dollar over the past few months and has helped other asset classes go up, like stocks and like gold. Other precious metals are doing extremely well throughout this period. They have an inverse relationship to the dollar, and I'm going to show you that right now. We can compare gold to the dollar. The orange line is the gold price, and you can see what happens when gold goes down, the dollar goes up. And when the dollar goes down, well, the gold actually goes up. And this is what has pushed the price of gold so high so quickly. It is the downtrend of the dollar in the recent weeks and months. So if we can figure out where the dollar is going, we can figure out where gold is going to be going after this coiling consolidation. So as you probably saw, we have a nice downtrend line on the dollar with a few reactions. We have two reactions there, one reaction there, and we are currently testing that trend line. Now, as far as technicals go, this is a very steep downtrend. We then have a consolidation on the dollar working off the oversold conditions we had here, and this will be a continuation of this pattern after the dollar has been rejected off this trend line. We do have a nice red candle of rejection of this trend line. Now, again, it's very soon to make conclusions. We can still turn around and make a major breakout, and we're going to talk about that in just a second. But for now, it's rejecting. And if we break back down below this consolidation range, this could trigger a bear flag pattern. And so we can zoom out a little bit, and you can take the pole of the flag and measure it out to where it breaks, and that will give you a measured target. And that would bring the dollar to around this level here, this 89 point level right there, which corresponds to some nice support right here. So right now, our target for the dollar, if we continue this downtrend, if we do not break this downtrend line, our target is 89 points. That could be reached in very short order. And of course, that would be accompanied by a major breakout on gold and a resumption of this uptrend that we had throughout 2020. Now we're going to compare this chart to 2008 because we have a lot of similarities to what was happening during 2008 right now in terms of technicals. So this was the technical picture of the dollar throughout 2007, and this was the big deflation of 2008, the great financial crisis. So you can see throughout 2007, we were in a heavy downtrend. We had a big sell-off throughout 2007 right here, and then the dollar started consolidating around this area, very, very similar to what we're seeing right now. We then had a rejection of a downtrend line that goes from this high right here, and the dollar started to sell off in a big way right there. And again, we can take the measured target from this move down and measure it out for a nice target, and we get to around this support level where the downtrend of the dollar actually stopped. So for now in 2020, this looks very similar. Now again, we're gonna have to see if this rejection sticks just like it did throughout 2008. But if it does, it would likely mean another leg up in gold. Again, we can see what happened to gold throughout this period right here. This move down right here corresponds to this last leg up in gold right there. In fact, we have a very, very similar pattern here. A big blow off top, a triangle pattern, consolidation right here, then a major breakout and a final move up in gold before a long-term top, and then we had breakout in the dollar, big deflation coming in, lots of buyers of the dollar, and that's when gold started to sell off, and stocks actually dropped a staggering 60% from that break. I'm going to clear the chart a little bit. From this breakout right here, we can see what happened in stocks. This was an early warning sign for the major drop from the 2008 financial crisis. So when the dollar breaks out, that's your warning sign. So if we go back to 2020, we have to be watching this trend line very closely. Right now, we're still rejecting off of it, but the day the dollar starts to break out of this trend line, that's when we're going to be going cash heavy. That's when we're going to be selling a big part of our assets, gold, stocks, and cryptocurrencies. All those asset classes will take a hit. Perhaps gold is going to be a little bit more protected. We don't think we're going to see more than a 30% drop in gold, but it will take a hit. So let's check out the actual targets that we have for gold for 2020. Right now, look at the MACD. It's about to make a bullish crossover. Momentum is about to get back into the bullish side. This is typical correction action. Going back to the zero line, the MACD zero line acting as support, bullish crossover right above it, and we're back on an uptrend. So this could be the real breakout. And our target for 2020, we're going to zoom out a little bit. We're currently targeting just above 2,200 points, so around 2,250. That would be the next leg up in gold before we see a major correction in gold around 20-30%, along with a big rally in the dollar as we discussed earlier. So I hope this paints a nice technical and fundamental picture for gold. This video was sponsored by FDscanner. FDscanner is an options scanner and research site. Options trading can be very risky. If you don't know what you're buying, you can lose a lot of money. FDscanner helps you filter through millions of options using the criteria that you want for a specific trade. They also have a new feature called Tendies Index that finds weekly options with high multi-bagging potential. If you trade options and you want to know what you're buying and what you're selling, FDscanner is a great free to use research tool. And for a limited time, you can also try their pro version for just $12. If you enjoyed this video, make sure to drop us a like and subscribe to the channel if you haven't already. Leave a comment below if you enjoy this type of content. As always, good luck on your trading and see you next time.